My name is Larry Kane. I'm a partner in Orrick's Emerging Company Practice Group. I've been working with startups and emerging companies for now 20 years. And I'm here with Joe Kraus from Google Ventures. Welcome, Joe.
Thank you.
And can you tell me how you got into venture capital?
I'm an entrepreneur by background, so I've started a couple of companies. One was in the early 90s called Excite.com. Grew that up from the 6 people that started it, a couple thousand by the time I left. And then in 2004 started a small company called JotSpot, sold that to Google in 2006. Was at Google 3 years doing product work and joined the very early venture team. There were 2 people in Google Ventures and had been angel investing for about 10 years, was a dabbler in it, and then switched from a dabbler to a daytimer about 2 years ago.
Congratulations. What's are some of the more interesting companies that you're working with now at Google Ventures?
So I'm a consumer internet guy. That's kind of my only background. And oddly, one of the companies I'll mention is not consumer internet, but I'm just a big believer that there's the companies that, the sectors you're interested in, and then there's the deals that you do, and it's sometimes those match up and sometimes they don't. So some interesting companies for me in the city, especially Relay Rides. This is a peer-to-peer car sharing service.
Well, I see them in Noe Valley every day,
yes,
every weekend.
Exactly, see their ads. Idea being that there's a big trend, which is I think people are valuing experiences over assets increasingly, especially in younger generations, and this notion of collaborative consumption or sharing of assets is an important trend. And what Relay Rides does is allow you to take your car when it's idle and have other people rent it out, and you can earn money from your largest depreciating asset as opposed to just losing money from your depreciating asset. And so I'm really excited about those guys. I think they're onto something. Another one, I'm big into the gaming space. I've done many different gaming investments, but Kabam is another company of mine, happens to be in this building that we're sitting in, that's really focused on a particular segment of the market. You know, most of the early gaming, Zynga as being the most illustrative, was about finding new markets for gaming. In particular, Zynga found in the casual gaming space, really taking non-gaming women and bringing them into the gaming world. Kabam is focused on the hardcore gamer market. Those people who love games and who already dedicate a lot of time to playing games, and bringing them into the free-to-play environment on Facebook or Google Plus or on their own Kabam.com website. And so very excited about that company. They monetize very, very well. You know, another one, again in the city, is a company not in consumer internet, which is Clean Power Finance. So, you know, the solar industry is booming in terms of the total number of residential solar power installations on people's houses. But if you don't offer financing, the close rates are about 6%. If you offer financing to a customer, they go up to about 20%. And so what Clean Power Finance does is they're a marketplace for offering financing to installers who in turn offer it to consumers. So just a wide range of things. I mean, I love what's going on in mobile. Obviously, it's hard not to, with only 1/3 of people having smartphones. The market is enormous, and the trends are obvious that everybody's going to have one, have a pocket computer. I love gaming, although I think it's increasingly hard to invest in. But I do believe that gaming continues to be a driver of a lot of people's spare time activity.
My little girls, every day they want to buy a new game on their Kindle.
They are not alone.
How do you see Google Ventures versus other strategic venture funds or traditional VCs?
Sure.
How do you guys operate?
Well, the first thing to note is we're not strategic in that we only invest for financial return. We invest in businesses that are competitive to Google, have nothing to do with any of Google's businesses, sometimes have something to do with Google's businesses. We have companies exit to competitors or non-related businesses. So fundamentally, people should put us in the bucket of traditional venture capital firms. Within that frame, there are several things that really differentiate Google Ventures that I think are important. And I think it really comes from the entrepreneurial background that many of the partners have. So when I was raising money, I've raised money from Kleiner and Redpoint and IVP and Mayfield and a couple of others. And the
household names in the valley, at least.
Yes, in the valley, at least. The the primary value proposition is we're going to introduce you potential partners and customers, and we're going to help you hire a senior management team. And I'll tell you, when I was at a very early stage, what I cared most about was, what I needed most was, I needed great designers, because how my product looked and felt and did it tell a story, was it easy to use, that made a huge difference with traction, and traction's how I raised more money. And the second thing I needed was, I didn't need a senior management team when I didn't know what my product exactly was going to be. I needed great engineers. So we've really oriented Google Ventures towards having a lot of operating groups, particularly in design. So we have a whole design group, multiple designers, user research, and we go out and do fundamental work for our companies. Last year we redesigned 8 of our portfolio companies' products from the ground up.
Almost like an incubator in some respects.
In some respects.
Yeah.
We have a technical recruiting team. We don't focus on helping you hire a senior management team, but we do focus on trying to live up to a promise, which is when you take our money, we will work to get you 5 world-class engineers and, importantly, teach you how to hire your next 20.
That's fantastic.
We have a teaching institution called Startup University that basically is about teaching blocking and tackling skills. And probably the most telling way to put it is, Google Ventures is 40 people. There are only 7 investing partners. The vast majority of the remaining people are operators, designers, recruiters, user researchers, people running Startup University, quantitative people, biz dev people, PR and marketing folks.
Do you guys charge for those services, or is that just part of the deal?
Gratis.
How would you suggest an entrepreneur, how would they approach Google Ventures? How would they get to you to make their pitch? How would you recommend to somebody?
You know, I think the sad reality of the venture business is that referrals from people we know is the best way in. Cold emails and other things, as much as I want to, the reality is I'm more than inundated with the total number of people that you're getting introduced to from people that you trust and know. And so that's always the best way in.
How many opportunities do you see a week, a month, a year? And how many does Google maybe invest a year?
Well, we're very active in the seed space. So we did last year over 60 seed companies.
So more than one a week?
Yes,
That's
in
fantastic.
the $100,000 to $250,000 check range. We'll do probably 20 deals in the Series A and above, with our largest checks being in the 20+ million, and our kind of Series A average check probably being 3 to 5, somewhere in there. So we're very active, and especially active in the seed space.
And the last question is, again, advice for the entrepreneur. What is an immediate red flag which you most often see when reviewing a business plan or executive summary or hearing a pitch? Like what do people routinely make that you know it's a problem?
There's no one thing that I can point to as, you know, here's the fatal mistake that so many people make. But I do feel that the way that an entrepreneur pitches his business or her business is an indication of the way that they lead, the way that they talk to customers. Like, if they can't explain the business successfully to an investor, it probably means that they don't have enough clarity in their own minds about what business are they really in, and it probably means that it's very hard for them to explain their business to potential customers as well. And so I think the biggest thing I see, mistake made that I think I see there, is people having a hard time crystallizing down, forcing themselves down to a very narrow definition of what their business is. And believe me, I understand it. As an entrepreneur, I was in love with my products. I spent all of my time thinking about them. I wanted to tell you everything about them. But the reality is, your average customer, and sadly your average investor, has a very limited time to think about your business. The customer might spend 5 seconds thinking about it. You don't have time to say a lot of things. You have time to really say one thing. And the product philosophy I have here is that there are features you describe, and there's features you allow your users to discover. And you get to describe 1, maximum 2 features in your product. The rest are discovery features. Yeah, and the mistake entrepreneurs make is they try to cram everything from a discovery feature into a
product.
Into the things that you describe, and that's usually an error.
Yeah. I see a lot of entrepreneurs come with an idea with multiple facets, but no clarity on what they're going to focus on, but they want to present everything because they're not sure which is going to land, and that's a problem. I think we're out of time. Joe, thank you so much for spending time with us today, and good luck at your next investment.
Thank you.
Thank you.